Edutrainment Workshops, the insurance industry's leading education and training platform, presents Life Insurance, the entry-level series, the products, the underwriting, and the planning applications to position your practice as the premier provider of insurance products in your community. Get on board, get on track, get to where you're going. And now, your Edutrainer, national insurance columnist, Steve Savant.
Well, welcome everyone. I'm Steve Savant, your Edutrainer and coach in our Edutrainment Workshops, and we're doing our entry level into life insurance, our kind of introduction into life insurance series. And this week we're doing our introduction into guaranteed universal life. And to help us do that, I want you to go out to Lincoln Benefit Life software downloader, that site, to go and get the illustration, which we believe the illustration system is probably one of the best, and it's great for tutorial. It's www.lblsales.com/ETW. When you come out to the site, you'll see Eclipse illustration software. Go ahead and download it, and then you can go with us page by page. Lincoln Benefit Life is an Allstate company, and they're our sponsor for these Edutrainment Workshops, and we think their software is excellent for their tutorial. Now, when you go ahead and download this, again, www.lblsales.com/ETW, and you download this, we're going to be going today page by page through their system to kind of show you how this works, and they have some really cool explanations that we think are very helpful for you in your tutorial lesson. Also, Lincoln Benefit provides a huge little dossier inventory of great ideas. And by the way, at the bottom of your screen, you'll see their email address, and also in our search engine optimization description page, you can actually go ahead and cut and paste and put it right into your browser. You'll see the life insurance review brochure. I think that's an excellent piece. I love the Facts of Your Life booklet. It comes in a hard copy or your electronic version, and that's a great place to harvest all your clients' financial information. And I like the electronic version just because I can keep a copy, put it in their file, and my client can keep their copy. It's excellent. And if you're looking at ways to express how do I talk to my clients, how do I send mailers out and so forth, they have a good inventory of prospecting letters as well as postcards, and you can go ahead and use those. These are already compliance approved by Allstate. However, if you're a FINRA licensed rep, remember you'll need to have your broker dealer sign off on it, on this information, or if you're using another insurance carrier or vendor. Now remember, our show, if you've missed any of our shows, we think you should go back and see the very first one. And if you need to do that, just hop out to our site, www.brokersalliance.com, and go ahead and hit our front page, on-demand videos, and all our videos, including the Business Insurance Zone. Now, one of the reasons I bring up the Business Insurance Zone today is we did a complete series on guaranteed life insurance, and 3 of those 5 dealt with guaranteed universal life. So if you like this show, hop out to our site, and it features Jessica Lopez, our National Sales Director in Life, and she has tremendous information, and we used a lot of spreadsheets on that show. And if you really say, man, I love the mechanics of this, go out to our site again, www.brokersalliance.com, and see our Mortality Mechanics series featuring Bobby Samuelson, one of the #1 life insurance experts and consultants in the United States on almost every kind of life insurance mortality chassis. He's out there, and that Tuesday show in that 5-part series talks about guaranteed universal life. Again, www.brokersalliance.com. Don't forget, you can also order our life manual and our patented vocabulary list, which I like to have out in front of me. So if you're learning and you hear me say anything, say, oh, I need to look that up on Steve's vocabulary list, just go ahead and do that. Order it, The Biz, at brokersalliance.com. That's The Biz, THEBIZ, at brokersalliance.com, and we'll send it to you absolutely free. And remember, one of the things that we're always trying to do is we're trying to walk you through basic ideas. Now, hopefully you've downloaded. If you didn't download it, pause this and go ahead and download the LBL software. But that's what I'm on now, and it brings me to this page. After I've done my updates, and it shows a couple, in this case, I'm going to choose Lincoln Benefit, I'm going to choose Arizona, and since we're talking about guaranteed universal life, I'm going to choose their Legacy Secure product, and it's going to go ahead and put me right in their illustration system, and I can go ahead and put my client's name, their birth date or actual age if I want, again, my male or female, and then I have, in their area, they have 4 different non-rated classifications, and I'm going to pick one out. I'll just use Preferred Elite for right now. And since I'm using Preferred Elite, I'm not going to use any flat extras or I'm not using any table ratings. But if my client was standard, let's say not standard smoker, let's make him a little bit better than that. If he was a standard non-smoker, he might be rated table 2. I could actually hit table 2, or I could come here and say he only has a flat per 1,000 extra. Maybe it's temporary. I could put the flat extra on there. I could do all those kind of things. But for today's argument or discussion, we're going to use preferred elite. And then when I come down here, I'm going to go to their death benefit. I can either solve by using the death benefit that I know, and in this case it's $250,000, or I could say I don't know how much I can afford, but I could put in the actual amount that I need and say, I'm going to put in the specific amount I can afford. So I can do it either way, solve by death benefit or solve by premium. And so right now I'm looking at $250,000 of coverage, and I want to specify that. So I put that in, $250,000, and then I go to the premium page. Now I can elect coverage protection guarantee. And remember, we've talked about this all this week, how you can select different durations and periods. And in my coverage protection guarantee, I can say I want it to be guaranteed all the way out to age, or in this case, the last age, which in there I think is like life of the insured, or maybe even 120. And I can use whatever premium mode. Now I could say I want a guaranteed payment. I just want to do a 10 pay or a 20 pay. I could want to do continual pay. I can manage that right in this box. How many years am I going to pay premium? And then say I want to guarantee that coverage. So I'm going to come in here and I have different ways again. I can pay annual, semi-annually, quarterly, monthly. I could even do a single premium. Now, as I move down the list here, I have different ideas that we don't use in guaranteed. Like I'm not really going to care about distributions or anything like that. What I am going to look at though is I'm going to go to their report page and I'm going to ask for key terms. I'm going to show all premium modes. I'm going to show next steps. I'm going to use the largest font, especially because of me, I got to see it, and I want to see the print expense report. And we'll get into that a lot more tomorrow. When I see that, I'm going to go ahead and they give you a choice before you actually print the illustration. They let you look at a thing called kind of a snapshot ledger. It's a summary sheet. And the first part of the summary sheet is it looks at the guarantees. So even though there are no guaranteed cash values all the way out, if you paid their premium, you would still have $250,000 all the way out, and you would see how far does it go out? To 121. So if you lived out that far, as long as you paid the guaranteed premium on time, and you would get your death benefit, it goes all the way out to age 121. If you wanted to look at the premiums involved in this, it would show you, here's the annual premium, here's the minimum premium, the guideline single, the guideline annual, the 7-pay test, and the target premium, where you can go ahead and calculate your compensation. Now, also, this is with the liquidity rider. Throwing the liquidity rider on this, in this specific case, remember now, not all carriers carry this. That's one of the values that Lincoln likes to use. Lincoln Benefit uses this value because they say in the 20th year, you have guaranteed liquid money that you can take out of this. It's a little bit more, but some people like the value proposition. Hey, I could walk out of there in 20 years and I would be able to have no buyer's remorse. I got all my money back and I had the coverage all along. That could be a way to go. Now, on the illustration itself, it's going to calculate all the things that we've plugged in, $250,000, the actual age of the client, the gender of the client. It's already put in what we consider their actual health classification. And we're going to go, and here's what it says. I like this because why do I use this software? If you're just coming into our business, what are you buying? And this is, a lot of our agents use this format, exact format off Lincoln Benefit software because they like the way it explains things. They just walk through it, a tutorial. It says life insurance protection, the premium, the death benefit, the guaranteed cash value refund idea. It talks about years 15, in year 20. It talks about the living benefits. And it always goes through the basic premise so that you can say, wow, this is pretty easy. It'll talk about your return summary, your return summary. If you die during the first year on your life insurance policy, the return on your premium will be, and it shows it like 11,300% rate of return. So I guess if you're into IRR, don't worry about it though, because remember, if there was ever any suicide during the first 24 months, it null and voids the contract. So you can't just do what you want here to get the rate of return. But what I'm doing, facetious, of course. Now, here's what the rate of return is. if I was living to a full life expectancy. Right now, they think the expectancy on this, based on I'm sure, the 2001 CSO, is age 83, and it would show you what would happen if you died. It would be a 7.16% rate of return. If you put that in a tax bracket equivalent, it could be as high as 1194. So if I just died tax-free, 7.16 return to my heirs, to my beneficiaries, and it also shows what are the odds of probability of death, 49% at that age. Well, that kind of gives me some hope there, doesn't it? Now, as I go through it, again, this is the kind of thing where you're looking at, am I showing, let me make that a little smaller here so I can read it, get it on the page. Also, it says, what is the annual cost of funding? If you ever wanted to figure this out, annual cost for funding, you take your total premiums paid, minus any surrender value in the year that you choose, and the number of years of coverage. That would give you your annual cost for funding. So you could look at this cost here, and it would actually calculate for you what was your annual cost based on what you asked for, your premium, subtract any surrender charges, and the years that you had covered. It's a great little piece, and a lot of people kind of like to know, is this a good deal or a bad deal? That's a great way to measure it. Another way is you could actually install the rate of return on cash value and death benefit on many illustration packages, and that gives you an internal rate of return much more to the liking of the fiduciary community, CPAs and attorneys, who are used to measuring economic viability and is it a good deal or a bad deal based on internal rate of return or IRR. It also gives you a summary of the tax advantages. And again, talks about the quote that you've asked for, your initial benefit, the premium, and some of the testing it does, and the guaranteed refund. Now this is one of those contracts I talked about that actually uses the liquidity guaranteed rider. So when I explain it, I don't want you to explain it, I want you to read it right off the proposal. This has already been done for you. I think it's a great little piece. I'm really glad that they installed it. And let me just tell you one thing about Lincoln Benefit and the semantics. We feel this explanation is very much in English. It's not buried in the legalese of traditional caveats, disclosures, and disclaimers. It really lays out what you want to go through. I say, don't pontificate on your own. Go ahead and use this. This is an excellent little description. Another reason why we like it. It also walks through some of the basic language or definitions. What's a policy year? Annual premium, total premium outlay, net distributions. I want you to start thinking of this as your own internal vocabulary within the proposal system. What I like to do is, anytime I have to explain something, I just go to the vocabulary and I quote it direct. So in net distributions, I'm just going to say, oh, she goes, what does that mean? Or he says, what does that mean? That's the total of all loans, withdrawals, and loan repayments made each policy year. A negative number shows the amount of the net distributions coming out of the policy. Distributions are assumed to occur at the beginning of each policy year. That tells me what I need to know. I'm going to quote it, and especially when you get into things like guaranteed statements, I want to read the guaranteed value page. Again, very good explanation in English, not a lot of legalese. I want to go through this and actually make sure that anything I'm going to look at, net surrender value, net death benefit, refund upon surrender. Again, all these definitions that people are going to ask you in some of your actual appointments, you want to be able to show that and walk through it with them because it's so easy to understand. Now, in this case, we're going to get into this more tomorrow. It starts to lay out the actual physical numbers of the proposal. And when I look at this, I'm looking at different columns, and I want to look at, and remember, because we're using guaranteed universal life, we have a lot less to moving parts because we're just buying a commodity coverage for death benefit. So it's going to lay out basic age, policy year, annual outlay, total premium. There's not going to be any net distributions on this because we really don't want to use this product for that kind of idea. You can get to your money, but I wouldn't use it for money-making idea. There's better ways to do this. Guaranteed net surrender and the guaranteed refund upon surrender, which it has a great explanation, which I'll cover tomorrow. And then tomorrow, we'll also talk about the guaranteed net death benefit, guaranteed in the contract, as I showed you in that small ledger summary, all the way out to age 121.
This has been an Edutrainment Workshop, the educational division of the National Insurance Clearinghouse, the marketing arm of Brokers Alliance, and sponsored by Lincoln Benefit Life, an Allstate company.